What's up, NIO family? It's Rey-Jay back with another video. And in this one, I want to break down what's happening with NIO, Tesla, SPY, and the overall market. I'm also going to break down what's happening with the market moving forward as we had Jerome Powell giving a very important speech, not to mention new developments in the charts that are going to give us more insights for tomorrow. But just know that I am not a financial planner, so make sure you take nothing I say as financial advice. And also, if you guys can, please check out my Moomoo link. If you deposit $100, you're guaranteed 5 free stocks. If you deposit $1,000, you're guaranteed 15 in total, not to mention 8.1% APY on uninvested cash. The offering is very soon in just a couple of weeks. Anyways, now let's talk about what's happening with the markets. So right now, guys, when it comes to NIO, we are looking a little bit more bearish as we have this head and shoulders like structure. Also, know we have this gap all the way down here, and there's another one down here around the lower fours, which could suggest more downside is coming. If you guys look at NIO, we're down 3.9% again. This should not be a surprise to any of you, as we've been calling this out for many weeks. So this is not necessarily a surprise, and I just want to say that I still see this as a long-term buying opportunity. But the question is, why did the whole market come down? Because it wasn't just NIO, right? If you look at the whole market, almost every stock was in the red today. We saw some big tech stocks kind of flat, but for the most part, the majority of stocks were in the red. Why is this? Let's talk about exactly why this happened and other pieces of news. So for today, we had Jerome Powell giving a speech as one of the biggest factors, not to mention PPI data. PPI was all basically very close to expectations, but we did see increases in PPI year over year relative to before at 2.4%. And then for core PPI year over year, it was also at 3.1%, another increase. So PPI on a year over year basis is going up. That's what caused the market to not really like the data as much. And then Jerome Powell started speaking. He caused the market to get rug pulled. So why is that? Well, it wasn't just PPI. Also, CPI did go up just a little bit on a year-over-year basis. If you guys look at the 12-month change rate right here, for the month of October, CPI went up. So that's what's ended up happening. This is not necessarily what the Fed would like to see. And if this trend continues, that's when we would become a little bit more concerned. It's not really like we can't really make that call quite yet. It's really early to say if CPI is truly going to be seeing another spike or not. We'll have to wait on that. The data is still not too bad. There just was a slight increase for the first time in many, many months. So that's part of the reason why I think Jerome Powell became a little bit more, I would say he was less dovish than before. So what happened was now there's been a big shift in what Jerome Powell has said. Before, he was like very, very confident the economy was fine. He's still saying the economy is fine and all, but now he's shifting the way in which the Fed is talking about monetary policy changes by saying that the Fed does not need to be in a hurry to reduce interest rates. He basically made that claim. This is just a couple of months after, or less than 2 months after they started their cutting cycle. So now with him saying that, and with him saying the Fed has to wait for the data, he basically said the same things as he typically has said when he's very ambiguous. So he was saying they have to wait on the data, give the market the time it needs. There's still a lot of progress being made and this and that. But the main thing that made all the headlines was this: the Fed does not need to be in a hurry to reduce interest rates. When he said that, the market started tanking, and that's what caused the market to dip. As a result of that, we did see a big shift in what we're expecting, at least from the Fed. We actually have a better chart right here. So now, when you look at December 18th, the next FOMC meeting, there's now about a 39% chance that the Fed will keep rates the same, about a 60% chance that the Fed is going to give us a 25 basis point cut. This went down quite a bit, and this has gone up, and we may see this continue. This might continue to go a little bit higher, and this might start tipping a little bit lower. That's the reason why we're starting to see this right here. The odds of us getting that cut are starting to go down, and the odds of the Fed keeping rates the same is starting to go up now for the month of December. Why? Because of Jerome Powell's tonality. For other factors involving the market, just know that for NIO, we have Alibaba announcing earnings tomorrow that could affect the way NIO ends up moving. So if they do really well and the Chinese EV sectors start running, this could help NIO bounce just a little bit. If they don't do too well, this could cause a dip. For today, we had Disney announcing earnings. So just keep that in mind. And then tomorrow we have Alibaba. Disney did very, very well. They ended up beating on EPS with $1.14 adjusted. They also beat on revenue, and they ended up raising their guidance as they did relatively well. Guidance without ESPN Plus being included is still very strong for them, so good news for them overall. That's why Disney did relatively well. For other factors out there, at least as far as NIO goes, basically the house of the NIO podcast is basically out, and we're actually starting to see a lot of very important individuals who are talking about NIO's new developments when it comes to reshaping the vehicle dashboards into smart connected spaces. And they're talking about Nami AI, which is a very, very nice assistant inside of every single one of the vehicles. So the share price is still bearish despite this news. There was some good news that came out as NIO surpassed 2,600 battery swap stations and over 56 million swaps globally. So that's very, very great news as they're continuing to grow and get better at this. And we hope that this continues as they start expanding to different European countries. In terms of their data, earnings have been quite decent. Financials are still showing that we have a nice revenue per share that's been increasing a bit, but our PE ratio is continuing to decline because of the share price going down. And then besides that, volume is only at about 39 million. So volume is now slowing down for NIO as we're seeing this shift. So the question now remains, what's going to happen to the share price? Let's talk about that very, very quickly. As far as NIO share price goes, we are looking more bearish right here. This could depend on Alibaba's earnings. If we do try to push up, look for 4.5 and 4.7 for its resistance areas. Our main support is going to be all the way down here, closer to about the 4.25 area, so all the way down here. So if that fills us, then we could be coming down to fill that gap down below. So from the way I see things, I just want to make this very, very clear that there is this gap over here to fill down to about 4.15. So I think NIO does have a risk of dipping even lower. Tomorrow morning, depending on Alibaba's earnings, we could attempt to pop again just to retest the 4.5 area before we start dipping lower. But the share price remains more bearish, and I do see a risk of us dipping closer to about 4.25. So keep that in mind. Once again, guys, there's a big head and shoulders that's not complete yet. This is still going to likely favor more downside for NIO temporarily. But there's going to be a big bounce later. I'm still a big bull for the long term. I made lots of videos about why we're going to go into the 20s within a year or two. So I still see a lot of upside for NIO, but this is just a short-term projections based off what we're seeing on the chart. Now let's look at SPY on the 4-hour time frame. Let me just hide these lines. SPY is looking more bearish. We're coming down to fill our gap on the daily. If we don't hold 592, which is where our gap support happens to be, I see a risk of us coming down to about 589, very close to 590, which is where our 50 EMA happens to be. We'll have to see if that holds or not. We have resistance at 595. If we reclaim that, we could try to bounce. We look a little bit more bearish, so we're favoring 592 flats. And if that does not hold, look for 590. And we'll see if we bounce off 590 or not, but there is a risk of a little bit more downside. So watch that 590 support. We'll have to see if that holds. If not, we're coming back down to the previous resistance. Our previous resistance becoming support at 585. So I think that's 592 and 590 are going to be our targets. We might be tipping closer to 590 before we try to bounce. Jerome Powell did cause a rug pull, so just keep that in mind. ES is also looking a little bit weaker after Powell's speech. 59.68 is coming. So if that does not hold, we could dip closer to about 59.50. That could be our next target if we don't hold 59.68. We also have resistance around 6,000, so I do see a risk of us dipping lower before we wait for anything else. So give this the time it needs. As far as Nvda goes, we're just range bound for the time being. We're going to be looking at 146.5 as our main resistance. If that doesn't hold, I see a risk of us coming back down to 145. 145 to 144 is going to be our target zone. I think we might dip a little bit lower on Nvda before it tries to bounce again. We're still range bound, but there might be a little bit of downside coming nonetheless. Bitcoin's dipping as a result of Powell as well. We have 87,788 as our resistance. If we reclaim that, we could be pushing for 88,500. If not, I do see a risk of us tipping closer to 85,000, which I think is very probable, and that could lead to a big shift. Tesla's looking more bearish. We got some negative news involving EV tax incentives being shifted under the new administration. There was that news that's been announced, but that's not really new to us. I think the news involving the fact that, first off, Tesla's runs so much, so it is due to pull back. But then secondly, there was a lot of new ratings coming out from analysts saying Tesla's going to 300. And then we also got some bad news involving the Cybertruck. Everything came out together, which is causing Tesla to dip. So we got to try to reclaim this this 319 area, very close to our 20 EMA. If we reclaim 319, we turn up. If we can't reclaim that, I think we easily start dumping back down to about 300 to 297. So that's going to be our target, 297 to 300. I think that's most likely coming before we try to bounce. If we lose that, we could dip even more to where the breakout happened to be. But I'm not going to worry about that yet. For now, 300 could be our target, and we'll see how things end up going from there. For others out there, we also have NQ. This could be dipping to about 20,974. If that fails, we're going to be looking for a dip back down to about 20,900 flat. For a little bit more downside, we could be testing the breakout area, which is around 20,800 or a little bit below that. So it might dip a little bit more. It's about the 20,950 area, and we'll see how it reacts. QQQ looks more bearish. We need to get back above 510. Otherwise, I see a risk of 505 to potentially 500. So look for 505 as our next target, if not 503 to 500. I see a little bit more downside most likely coming. We'll see if we bounce off that or not, especially after Jerome Powell's speech. Aapl might retest 226 before it tries to bounce again. It still has a nice setup, but just look for a little bit of a dip then a bounce. There's a giant gap on and the IWM that's starting to fill. If we don't hold above 130, 232, excuse me, then we could be tipping back down to about 226. So there's a risk of that downside. Looking at Coinbase, we could be coming to about 272, if not a little bit lower, to 260 before it tries to bounce. Might be more downside coming. Amazon's going to be dipping to about 209. We'll have to see if it bounces or not. Meta might be dipping to about 575 to 572. Microsoft might be dipping to about 423 before it tries to bounce again. And Google could be retesting 175 before we see anything else. So with that being said, guys, I want to thank you all so much for listening. I hope you guys have a great day. Unfortunately, NIO is looking more bearish. It could see a rebound thanks to Alibaba's earnings. We'll have to see how Alibaba does, whether we get a small rebound to about 4.6 or not. But ultimately, I do see more downside into the lower fours that's coming because the head and shoulders is not complete. Is this the end of the world? No, this is just another long-term buying opportunity because NIO will rebound when the time finally comes. Until then, I just want to say I really appreciate you guys so much for listening. So please have a great day and peace out.